Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Monday, November 5th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Well, folks, here we go. The market's trading basically around the flat line, which is what we expected. Again, ugly late day sell-off on Friday, but in all fairness, with the elections looming, the market seems to want to know the results before it makes a major move in the next couple days. So again, what I generally expect is a neutral, maybe even a slightly positive market today and tomorrow, and then by the afternoon of tomorrow, you could start to see some rockiness, and especially on Wednesday, we'll see if we don't get some more volatility following the election results. Now, if you ask me, there's one worst case scenario, and many people wouldn't understand this necessarily, but what I want to make clear is that this market, the election, to the Wall Street, to the economy, it's secondary. I know that may seem like a shock, but it is secondary. The number one thing is the fiscal cliff here. And if the election is so close that you get bickering between the Republicans and Democrats and more of this animosity, it could literally put these two sides on the polar opposite levels when it comes to the fiscal cliff and agreeing on that, and that could actually be the one major downfall going forward, folks. And I mean, we're talking, if they don't fix this, if we don't get this stuff in line, if we don't get spending in line and so forth, we are literally talking the possibility of a new recession because of this bickering and no action being taken. So again, my worry is not whether or not Obama or Romney gets elected. As long as it's by a decent majority, that's fine. If it's close, if there's recounts, if there's arguing, if there's yelling, and there's this and there's that, that could literally be what causes the market to spiral down. Because, again, the implications on the fiscal cliff could be monstrous. All right, having said that, right now the S&P down less than a point. NASDAQ is up about 6 points, and the Dow is down about 14 on the day. The markets are actually consolidating here in a slightly bullish manner. Upside is minimal, though. You're talking about a double top right here, 200 MA and 50 MA in trend line. So right now, this is your general upside target if this market continues to make a move. That's right around the 141.70, 72 level on the SPY. So about 20 cents up. That's about it. All right. If we look at the overall indexes, what's moving, what's not moving, really Apple's been a wild mover. Apple sold sharply on Friday, ending down about $20. Today it's kind of been all over the map. Pre-market it was down $3-4. Then by the market open it was up close to 10, and then since then it's come all the way back in here and is just up $4 on the day. Here's your gap fill line. You can see it actually hasn't officially filled the gap today, but it's come down twice just above that level. If it does break through gap fill, you have a little support at double bottom. If that gets taken out, it's going to 568. $568 would be your next level if it takes out the lows from Friday. All right, let's see what else we have here, folks, as we scan through. Facebook today is really trading around the flat line. A lot of people were very bearish over the weekend on Facebook. I was not one of them. The main reason why I wasn't so bearish is because everyone else was bearish. I'm a big contrarian, and I think there were a lot of people saying, oh, well, the lockups expired, so lots of selling. The market has factored that in already for the most part, folks. I don't think it's a major thing. And plus Facebook is off those earnings move highs from all the way up here all the way back down here. So as long as it holds the moving averages here, you probably look for upside. And if it breaks there, then it's going to gap fill right here and then double bottom right down there. Those would be your next two levels on the Facebook chart. Okay. JPM is down while Goldman's up. Amazon's up slightly. Apple, again, is up slightly. Google's taking a little bit of a hit today, though it is off its lows of the day. You can see here a nice pop there on Google, but nonetheless a very, very weak showing. Obviously, since they missed earnings, that was one of the major issues there. Since earnings, I mean, it just got clobbered, and really any bounce has been a selling opportunity for investors in this stock. Taking a look at a couple other things, folks, I want to just go back to the spiders on an intraday basis. Volume very, very light. You can see the spiders starting to uptick just a little bit. I am along the SPY right now via the SSO, just because, again, I do feel that we're going to head up towards those moving averages. I'm in the money by a decent amount. My SSO entry was 58.91, and right now the SSO is trading at 59.03. So I got a mental break-even stop, and I'm looking for a target of the 50 MA right now, double top, to take profits on that. All right. Let me just see what else we have going on. Exxon, Chevron flat to positive today. Some stock movers today. We are seeing First Solar, which was up more, is still up 52 cents on the day. So a little bit of a move there. A couple other stocks I'm keeping an eye on as well. Just going through them. take a look at GMCR. GMCR is down about 50 cents. The one reason I'm paying attention to this is because you had this wide range bar out of the consolidation, and if these bars of consolidation pullback stay within this green candle over the next couple days, you could actually get a follow-on pop on that. So I'm keeping an eye on GMCR. Baidu continues to head lower, down over $2 today. This stock is going to 100. That is a no-brainer to me. It's only about $3 away at this point. I actually think it's going to go lower than that, too. I think you'll get a small bounce at the even number of 100, and then after that, it's going to head all the way down to the 95 level. 95 right here. I think this is your ultimate move in the short term, and I think everyone thinks it's going to stop at 100, but I don't think it will. And I think that's where they're going to catch a lot of the amateurs off balance. They'll get a small bounce there. They'll think they're going to get more, then it's going to flush to 95. Then the pros will enter around 95 and make some good money on that trade. So we'll keep an eye on that one as well. Let me just see if there's anything else. The dollar continues to advance. We had an awesome swing trading week last week with IBM, nailing IBM for $6 on the upside bounce. We got out right before it collapsed on Friday, which was a sweet trade. In addition, I'm long the dollar still. I've been long the dollar since down here. That's been an awesome trade as it's coming up towards my target being the 200 here in the gap fill. But this has been a great trade as well, folks, as we just continue to kind of print money left and right in the Research Center at InTheMoneyStocks.com. The Research Center is one of the services we offer here. We offer the Research Center, which is geared towards swing traders and investors, and the Intraday Stock Chat is geared towards day traders. And this day trading has just been phenomenal over the last couple of months. I mean, the money we're making there is ridiculous, and everyone in the chat room learning the methodology. And this is all proprietary methodology, which is a sweet thing as well. By the way, spiders are popping up here, guys, so I got to get ready to sell my position here as we are popping up. You can see a little bit more. It's going beautifully higher here. I'm going to not get too greedy on this for the most part. Definitely not too greedy, but we'll see if we can't get a little bit more upside here. Okay. Spiders again, one more little push up into that 50 MA and double top, and I think that's what we're looking for there to take some profits off the table. All right, just trying to see if there's any other level that I'm looking to play here, but I think that for now is about all I'm seeing. Let's see what else we have here. JPM remains weak. Apple's starting to get a little bit more of a bounce. Whenever Apple bounces, that's when the market bounces. You can see Apple jumping up there into the 50. This level is actually pretty big on Apple. Pivot high, 50 MA. If it can somehow fight through there, it could go back to the highs of the day. But if not, then obviously it's staying where it is, and we'll continue to monitor it there. All right. Let me see what else. That's about it. EBIX had a big tumble earlier today, but that came back pretty nicely. That was a SEC investigation or some nonsense where the stock collapsed there. But look at that comeback. I mean, that's just an amazing comeback on EBIX. And we'll see. But nonetheless, I'm going to continue to post on Twitter my trade alerts as well as on Traders Life. The better ones go to Traders Life, obviously, which is for members here at InTheMoneyStocks.com, as well as I'll be in the intraday stock chat this afternoon. Any swing trades I take will be posted to the Research Center on the hot charts and alerts. And let's just continue to do what we've been doing, guys. Make money. All right, it's been a nice little grind here over the last few weeks. Even with the elections, the money's still rolling in to members' pockets via the trade alerts. And I encourage you to come take the 7-day free trial here at InTheMoneyStocks.com. Can't go wrong with the 7-day free trial. Take care, guys. Again, In The Money Stocks is the place to be for proprietary methodology. We will teach it to you. You will use it to trade and profit for the rest of your life. Take care.